Assalamualaikum and hello everyone. We would like to share about audit planning and fieldwork. What is audit sampling? Audit sampling is the application of audit procedures to less than 100% of the item in financial statement for the purpose of evaluating some characteristic of the item selected in order to form or assist in forming conclusion concerning population. Representative samples criteria. Representative sample is one which the characteristics sample of audit interest and approximately the same of those of the population sampling. Statistical sampling. Audit sampling that use the laws of probability. Random selection of samples. Example, provide non-probability of selecting each item in population. Next is non-statistical sampling. Audit sampling that do not use laws of probability. May use random selection or pure judgment in selecting samples. Example, systematically selection, audit divide population, and haphazard selection. Reasonable assurance is the level of confidence that the financial statements are not materially misstated, that an auditor exercising professional skills and care is expected to attain from an audit. Achieved when the auditor gathers sufficient appropriate audit evidence to reduce the audit risk to an acceptably low level. There are 5 methods of sampling. The first one is random selection. Next is monetary unit selection. The third one is haphazard selection. The fourth one is block selection. And lastly is systematic selection.
Audit procedure. Audit procedure is a method and techniques used by the auditor to gather and evaluate evidence.
Inspection involve having the audit staff examining, record, documents or tangible item of the audit client. Inquiry and information. Seeking information and getting confirmation from inside and outside company. Recalculate. Checking the arithmetical or perform independent calculation. Observation. Observing clients, staff performing a process in relation to area of audit concern. Analytical procedure. Identifying and investing unusual fluctuation and item, especially in the bank statement and income statement.
Terms used in audit procedure is part of test of control. The auditor conducts this test to obtain evidence about the effectiveness of the design of the internal control structure and the operating effectiveness of the internal control structure. 3 questions may be raised with regard to the operating effectiveness of the design of internal control. How well were the policies and the procedures performed? Were they applied consistently? Who applied these? Answers to these questions may also provide auditors with evidence to support a preliminary assessment of control risk.
Procedures used in test of control. The first one is observation of personnel in performance of their duties. Next is discussion with personnel regarding the performance of their duties. Lastly, inspection and evaluation of documents for evidence that control procedures have been performed. Substantive procedure where the internal control is weak. Area of risk detection, risk which is directly controllable by the auditor. concerned primarily with the quality of the output from the accounting system and with the detection of transaction of account balance error. Substantive procedure. Analytical procedure. Complement the substantive test of transaction and account balance. Enables the auditor to detect out-of-line condition and unusual fluctuation. Study of relationship and comparison between data. Help the auditor in reducing detection risks for specific financial reporting assertion of details of classes of transaction. Express the details of the sample of selected transaction. Error occurring in the account. Audit objective to obtain audit evidence. Test of occurrence. Uncover situation of stress if some error or fraud happened. Test of completeness. Aim at establishing whether all transactions that should have been recorded are so recorded. Test of accuracy. Recalculation of transaction and the information in the accounting record. Test of cut-off. To ascertain that transactions are recorded in the proper period. Test of classification. Ensure that appropriate accounts are used specifically for a particular transaction. Test of details of account balance and disclosure. To detect monetary error normally applied to financial statement. Audit objective. The auditor should concern with obtaining evidence about the assertions by the entity. Test of existence. The auditor of existence. Concerned with whether an asset or liability exists at the balance sheet date. Test of rights and obligation. Concerned with whether an asset or liability pertain to an entity at the balance sheet date. Test of completeness. Concerned with whether the financial report account balance are properly recorded. Test of valuation and allocation. Concerned with whether financial reports balance are stated at their proper amount in conformity with Malaysia accounting standards or other approved standards. What is audit evidence? It is the evidence obtained during financial audit. Sufficient appropriate audit evidence. Sufficiency means that the measure quantity of audit evidence. The number of evidence obtained must be completed to be used and considered by the auditor. Appropriateness defines as the measure quality of audit evidence. Appropriate related to the reliability and relevance of the information. Persuasive audit evidence. Auditors prefer to be reasonable in their services than absolute. It is typically persuasive rather than conclusive. The persuasive evidence is collected using sufficiency and appropriateness. Types of audit evidence. The first one is physical examination. Physical examination is inspection by the auditor of client's tangible asset. Next is observation. Observation is involve auditor watching the activity of counting the cash, and the auditor will compare with client's cash records. The third one is inspection of documentation or records. It is when auditors inspect the client's documents and records. Confirmation of clients. Obtaining confirmation from independent third parties, verification in writing of the accuracy of some information. Next is inquiry of client. A set of questions directed to clients or third party with knowledge about a particular matter. Lastly, analytical procedure. It is overall overview of financial statement at the end of audit processes.